Or is that?
Yeah, that can be what it is. Yeah, that's what it is.
Is that what that?
Yeah.
For the Maverick Bank here in town, and so he's gonna. Can you tell him a little bit about yourself as far as like your major, and if anybody's interested in going into banking, maybe what they need to be. Oh,
You get this?
yeah. As far as if they're interested in going into that field, like what recommendations or advice you would give to them?
Sure. So actually, when I went to South Plains College, I didn't know I wanted to be a meteorologist, which is weather. So I should have done that because you get paid to be wrong, but I didn't do that. So if you start off at SBC doing business, I would go into business school or business classes. I didn't do that. I was a little behind, and then I went to tech. I went to the Rawls. Have y'all heard of the Rawls College? They have all the business classes. So that's the route I took, and you learn a lot. And if you go into business, you can do a million different things. You don't have to do just banking. So it's a really diverse degree. You can do all kinds of things. So, but before we kind of get into the presentation, do y'all have questions on business type degrees, banking, anything like that?
Loans, anybody loan?
And we'll cover loans a little bit. We'll cover loans a little bit towards the end. So we'll just cover some high level stuff, and then y'all have questions, don't hesitate to stop me. I do. This may be a little incentive. I have 3 giveaways. There's only like 6 of y'all in here, so half of you might get a giveaway. I'm gonna ask a question though a little bit later. So my name is Landon McCormack. I'm the market president of Maverick Bank in Levelland. And if I can get this clicker to move forward, we'll talk about banking, budgeting, and credit history. And credit history will kind of cover some loan stuff as well. So, we probably all have a bank account. I'm going to ask though, who do y'all all have a bank account? It's pretty common. So there's a statistic that maybe I'm too far. Yeah, there we go. So in 2023, 96% of the population had a bank account. It's very common, something you have to have really to survive in the United States. But if you have an account, your parents may have helped you open it, or you may kind of forget what was available, what you needed to open an account. So this is the first question. There's a giveaway for this one. So there's 4 main things that's needed to open an account. So I'm gonna let one person attempt to get at least 2 of those, and if you get that, I'll give you a little gift. So who wants to take a crack at 4 of those things? You want to try it? Okay. What is your name?
Adrian.
Adrian. Okay.
I guess you need money, and then maybe like pay stubs, so you get income going in.
Okay. Those are not on my list, but those are good. So what documentation do you think is
You
needed?
need your social security and then your ID.
Okay. You already got 2 of them. So there's the driver's license and then social security number. You don't have to bring the actual card in. You can usually just give them the number and you're good. And then your cell phone number. And this is where you can mess up your email address. So when you graduate from South Plains College, your email address will at some point go away. Y'all might know when it goes away, but at some point it will drop off. So if you sign up for anything, a bank account, don't give them your SBC email. Give them like a Gmail, Yahoo, anything personal that you have. And I'm going to go ahead and give you, Adrian, that gift card. So got a Sonic gift card for Adrian. Thank you. Okay, and then y'all may have heard the saying that money makes the world go round. If you're in college, you're here to get a job in the future, and then you're here to make money when you get that job, and your money supports you and your lifestyle. Adrian took my gift card and ran, man. No, I'm just kidding. So either you can control your money or your money can control you. So we'll talk a little bit about budgeting. Knowing how much you can and should spend each month. So one of the biggest things that we see in banking where people mess up is overdrafting their accounts. So we'll talk about overdrafting a little bit and kind of run you through a real world example. And we'll talk about establishing a savings and an emergency fund. So who can tell me? Your mom's got the answer. What an overdraft is.
When you spend the money you ain't got.
That's right. That's another one of my things. So that is correct. So most banks, they'll let you go overdraft. This one's candy. So that one's yours. Thank you for participating. So an overdraft is when you spend more than you have. And the banks are going to let you do this, but they're going to charge you usually about $30 for each time you swipe that card when you don't have the money. And that adds up over
Mine was
time.
35.
So 35, yours is 35? Yeah.
My bank does 35, and I think it applies every day. So for every day that you
Really?
don't pay the balance that you charge to the account,
Okay.
they just
Keep-
hit you with 35
Yeah.
every day.
And the way that we do it and a lot of the local banks do it is every time you swap the card, you get a fee. So if you buy a $1 drink, you get charged $30. So that drink turned into $32. So, and I'll walk you through an example of kind of what that looks like. So, let's just pretend that, today is Wednesday and we get paid on Friday and we have $5 in our account. We don't want food from Loveland tonight, so we're going to go to Lubbock, but we need gas. Okay. So we're going to go get gas. We're going to go to Walmart, get gas, spend $20. So as you can see, we're about to be negative in our account. So the bank's going to say, okay, we're going to let you do that, but we're going to charge you a $30 fee. So we get gas, and now our account's at negative $45. So as you see, our $20 gas run turned into $50 after the fee. And then we get to Lubbock, and we have negative $45, and we go to Chick-fil-A, and we spend $15. Once again, the bank's going to charge you another $30 fee to do that. And now our account's sitting at negative $90. And then the last thing, me and my wife, when we leave Lubbock, we go get a coffee, a nice coffee. So we go to Dutch Bros and spend $6 on one coffee. This clicker's not a big fan of me. So, our coffee turns into $36 instead of $6. So I see this every day. We have a report that we go through every day, and I can see people that go into their overdrawn accounts. It's a big deal. Banks make a lot of money off these fees. It is fee income to the bank. But I don't want you to do that. Do not make the bank money off the fees. So obviously one way to do that is to budget, which we'll cover here in a second. So as an example, how do we budget it? This is what our Lubbock trip would have cost us. It would have cost $20 for gas, $15 for Chick-fil-A, $6 for coffee. So it would have cost us $41. But since we didn't have the money and the bank covered us, our gas was really $50. Our Chick-fil-A was $45. And if you're like me, I like Texas Roadhouse. I'm going to Texas Roadhouse. If I'm spending $45, I'm not going to go to Chick-fil-A for that. And then a $36 coffee. So when you add that up, you spend $90 more than you should have had you just budgeted. So are there questions on that? That's a kind of a big topic, but y'all have questions on overdraft?
Are there some banks that just don't let you, like if you don't have money, you can't use the cards or just
So banks have like a limit. So when you open an account, you can choose to go to get overdraft or not get it. I recommend,
I told them if I ain't got it, cut my card
and
off.
that is a great, you need to
Don't
tell
even
everybody
let
that.
me-
Yeah,
don't even let me
that's
play.
a good response. A lot of people want it just in case something happens, and that's okay, to use it periodically. But the bad part is they get into it and it's hard to get out of it. So if you're in this example, you were $126 overdrawn. So when you get paid, $126 just covers your balance. It doesn't really give you any money. So it's a hard hole to get out of, and that's why we try to keep people not going in it, because it's a bad habit. So we'll kind of talk about a budget. Have y'all thought about budgets? Have y'all had classes about budgets or anything?
Yeah, I think about those because they sound great.
Yeah, and
Yeah.
budgets are. A lot of people say they're in theory. They're not always practical, but you can get close. If you look at your budget, it really helps you keep your expenses in check. So, for this example, I just assumed a $45,000 salary. We're all going to make different salaries in here, so I'm just assuming that our take-home pay is $2,700. And really, what I wanted to show is there are fixed expenses and variable expenses. So, for instance, let's just assume that we're renting an apartment. So that rental payment that you owe is the same each month. It doesn't change unless your contract renews. Now, your utilities, to me, is one of the hardest to gauge because it changes every month. It's never the same. So, my gas bill in the winter is high. I'm actually scared to see my next bill because it's been so cold. And my electricity bill's pretty cheap in the summer. I'm sorry, in the winter. And same thing for the water. The water for me is more expensive in the summer. So you really just have to, out of those three, just kind of get a good guess of how much you're spending each month on an average and get close to a budget there. And then the next one, groceries and restaurants. These, for me, are the easiest to overspend because I like to go eat out. And as y'all know, that's expensive. So you really, when you build your budget, you want to put in a higher number than you think because you'll probably get close to it, honestly. And just make sure that your budget fits in, that you're making money each month. And then I have YouTube TV, Netflix, and a cell phone bill on there, which are all fixed expenses. And then you'll see these are just, normal expenses that you'll see. But at the very end, I want to show you this because not everybody will teach you this, but I think it's a good way to do it. So if you don't have a savings, I really recommend you put it in your budget. If you put it in your budget and when you get paid, transfer $100 to your savings, you have created a savings account. And it's just a really good way to establish that. Treat it like a bill. That way you always have it because, as we'll talk about in a second, there are emergency expenses that will happen to everybody in this room. And it's good to pay that in cash and not have to borrow money for it. So that's a pretty quick overview of a budget. Do y'all have questions on the budget? There's a million ways you can do it, but it's good to have one.
And I think sometimes the banks too will show you what you're spending. If you're like, I don't have a budget, but I still want to see what. Sometimes some banks will have you can click on certain things and they'll tell you what you spent most of your money on.
Yeah, kind of categorize, where it went. So yeah, and most banks, especially if you find a local bank where you can talk to a real person, they're willing to print off your statement and kind of walk you through some of those things. So, saving $100 each month is $1,200 a year. That's really, in the grand scheme of things, not a whole lot, but it's a starting place and it can cover some unexpected expenses. So, like I said earlier, emergency expenses, they're not a if, but a when. They're going to happen. It's just an unfortunate part of our lives. Some examples are, medical bills. If your car breaks down, I know from experience, cars are so expensive. If it breaks, it's going to be expensive. A few $100 almost guaranteed for whatever it is. And then, if you own your home, a hot water heater breaks, that's just another expense. So you just want to, if you can pay cash, that's the best way to do it. This was from a few years ago, but there was a CBS News report that about 60% of Americans couldn't cover $1,000 emergency expense. So that's a pretty good chunk of citizens that would be kind of in a bind if something went wrong and they had to cover it. And then how to qualify for a loan. So the first step really is making sure that in your budget, can you afford the loan payment? If you can afford it, then the bank will see that and say, well, you qualify based off of income. But the second thing they're going to look at is a credit report. So a credit report really, it shows you if you have a loan, are you paying it on time? if you've missed a payment, was it just one time? Was it 10 times? It really shows a bank all the history and tells the story of how you repay your bills. And so who looks at your credit score? So really anywhere that you would apply for a loan is going to look at your score. So banks, car dealerships, mortgage companies, they're all going to pull them. There's several different credit bureaus that they could use to check your score. And you may ask, what's a fair credit score? So there's a chart I'm about to show you that goes from 300 to 850 on the score. So I do want to ask someone that hasn't already gotten something, what a fair credit score, meaning the minimum score that's considered acceptable, fair. So I'll let someone guess and see how close we can get. So you're just guessing between 300 and 850.
350,
So go high.
400,
Keep going.
500,
You're close, but keep going.
550,
And add 100 to it.
Yeah.
650.
650. Okay, there you go. So when we're done, I'll give you the other thing. But yeah, 650 is considered fair. So if a bank sees a 650 credit score, you're on the cusp, but you're on the right track. And honestly, on the scores, it is not, if you pay everything on time, it is not hard to get a good score. It really isn't. But just like with a lot of things in life, if you have a hiccup, it's hard to recover it. It just takes time to get it back up. So as you can see here, anything above 700 is considered good. Anything above 750 is considered excellent. And then, we're kind of in a society where you have to have credit to get a loan. So, even if you pay cash for everything, a bank's going to say, well, you don't have a credit score. So that's kind of an unfortunate part also, is you have to have a score to get a loan. And to me, this is the easiest way and the most dangerous way of building credit is getting a credit card. So the responsible way to do this is, say you spend $150 on gas each month. Every time you get gas, swipe your credit card for the gas. And when you get paid each month, you pay that fully off to a $0 balance. And by doing that, you're not paying anything more than what you spent. There's no interest, fees. It's just what you spent. And that builds your credit over time. And you're not paying a dime more than you would have had you swiped your debit card. Now, it's dangerous because if you use it without budgeting, you can overspend really easily. And the credit card companies, they honestly don't care. They want you to spend more than you should because they charge 20 to 30% interest on those cards. So I would really be cautious with that. But do y'all have questions on establishing credit, getting a loan, or anything else that we've covered? Nothing?
I have a question. How would you recommend parents of high school students, if they're trying, do you recommend that age to try to get them started on with the building a credit score?
Sure.
Or even college students as freshman college students?
I would say
what's the
that's a
best
good
way?
question. I would say as a college student, I think it would be fair for them to get a credit card, but you can be added to it where you can monitor it. That's what I would recommend doing. I kind of started late. No one told me this. I was already at Tech at the time when I got my first credit card. I didn't have any credit history, but yes, as a college student, you're at a point where you can start building credit. And you just really want to explain, you really need to pay it off each month. But I think high school personally is a little too young, but college I think is appropriate.
So how easy or hard is it to get a credit card as a college student?
Yeah.
'Cause
So
back in the day, they were just giving them away.
right. So you have to, when you fill out a credit card application, they're going to ask what's your income. If you don't work, you're going to get declined. If you put 0 in there for the income, they're going to decline you. So there needs to be someone on the card that's making income to fill that out. So what I recommend too is you want to apply to a big credit card company. A lot of banks, even us, we have a credit card, but you want to go through Discover, Chase, Southwest, stuff like that, Capital One, because they're so big, they take more risk. So they'll approve you more than likely. So that's a good question. Did you have a follow up on your question about the credit cards? Or were you?
I was just wondering for like the parents of maybe like seniors, juniors, because I had heard some like parents say, "Oh well, I'm gonna get a credit card. I'm gonna add
Yes.
my kid on there, and that way
And you
they're
can do
the
that.
ones doing that, and it kind of helps." But I didn't know if that was like the best way y'all would
You can.
suggest. Or...
You know, my wife's parents did that with her. And the crazy part is she didn't know whether that was being paid or not. So as long as the parents are responsible, it helps. But if the parents aren't, it hurts them, you know, when they get to adult life. So, but yeah, I think if you wanted to add them and build their credit, it's not really too early to do that just because at some point they'll need a good score. So,
But also and I don't know if you'll talk about this, but the credit scores too are important too, because, you know, sometimes it'll make a difference, especially like if you're getting a phone, whether or not it's a free phone, like you don't have to activate it or pay fees and things like that. So, you know, apartments, things like that, they look at that. And
yeah, that's a good point. We see that. You know, we don't, if you're paying your cell phone bill on time, we couldn't tell you, it doesn't show us anything. But if you are late on your Verizon bill or something, it does show up. And we'll see that there's a collection, is what it's called, where you haven't paid your bills. So all those things will show up. So it's a good point. Any other questions? Okay. Well, I appreciate y'all's attention and feedback and questions. And I'm pretty accessible, so if I need anything, have a question about a budget, I'm happy to answer questions, help you fill one out. I'm pretty open. So, but with that, I appreciate y'all's time, and I owe you something. So, but thank y'all. Appreciate it.
I was gonna ask you one more thing as far as like if someone's looking to, you know, open up an account with a bank, like what are some of the things they should be looking at as far as pros or cons to certain banks, or you know, are all banks the same, or are they different?
At the end of the day, all banks are pretty similar. I am a little partial because I've worked for a local bank my whole career. But I think if you bank at a local bank, it's better because they're more willing to help you. They really are, because if you call a big bank, you're calling a call center. They don't know you. They're probably not from West Texas. And so you're kind of just more of a number to them. So if you go to a local bank, there's a bunch of them in Loveland and Lubbock, and kind of get to know some people. I think it would help you if something were to happen. You know, if you go overdraw on your account, they may be willing to refund a fee, whereas a bigger bank may not do that. So, but it's another good question.
Thank you. We appreciate it.
Thank you. Appreciate y'all.
Yeah.
Got our closest spring break, kind of. I do have pins if y'all want a free pin. Right.
I'll take